On Friday, spot gold fluctuated and pulled back at high levels, eventually closing at $4.592.25 per ounce, down $14.93 or 0.32%. Continuing the recent consolidation trend at elevated prices, spot gold weakened amid fluctuations as the temporary easing of geopolitical tensions and adjustments to Federal Reserve policy expectations triggered by strong U.S. economic data jointly undermined investors' safe haven demand for gold, weighing on the gold market. Divergences in Fed policy expectations triggered a rebound in the U.S. dollar. Earlier, Fed Governor Milon indicated an expectation of approximately 150 basis points of interest rate cuts in 2026. But subsequent hawkish remarks from several officials, coupled with Trump's hint at a potential replacement of the Fed chair, led to changes in market rate cut expectations. The U.S. dollar index rebounded to the 99.30 level, exerting short-term pressure on gold prices. Meanwhile, the 10-year U.S. Treasury real yield rose temporarily, further reducing the allocation value of gold. In addition, profit-taking pressure and the outflow of a large number of profitable positions exacerbated the technical pullback in gold prices. SPDR Gold Shares, the world's largest gold ETF, also recorded a slight reduction in holdings on January 9th, reflecting divergences among short-term speculative funds. Furthermore, with the upcoming 3-day long weekend holiday in the U.S., some traders closed positions in advance to lock in profits, further amplifying market volatility. At the same time, geopolitical situations triggered a wait-and-see sentiment. The Middle East situation remains complex. U.S.-Iran tensions have not escalated, and the U.S. has temporarily slowed down military operations, easing market concerns about an immediate conflict. However, differences between Israel and the U.S. over the Gaza issue have intensified, leaving safe haven funds in a wait-and-see mode with partial withdrawals, dragging down gold prices. Next week, geopolitical risks may escalate further with the opening of the World Economic Forum (WEF). U.S. President Donald Trump will deliver a speech in Davos, Switzerland, on Wednesday. In terms of U.S. data, the fourth quarter final GDP and December PCE data may also trigger market volatility. Monday, U.S. markets closed Martin Luther King Jr. Day. WEF annual meeting opens. Wednesday, Donald Trump delivers a speech at the World Economic Forum (WEF). U.S. pending home sales. Thursday, U.S. third quarter final GDP and initial jobless claims. Friday, S&P Global Manufacturing and Services PMI flash readings. All content herein is for reference only and does not constitute any investment advice. Investors who trade based on this information should bear full responsibility for their own profits and losses. Please subscribe, like, and share. Thank you for watching.